Mic test, one, mic test, two. Hello, hello. All right, there it goes. Mic test, mic test. All right. All right, we're just going to get into this. I ain't got time. We ain't got the time today. All right. Hello, Internet. Happy hump day. It is Z-Rex with No Noise Live with show number 269. Oh, yeah. Can't believe it's already 269 episodes. That's crazy. It is March 15th, 2020. Trace around noon o'clock. I'm a little late again today. Sorry, the holidays have my kiddo schedule a little bit altered, if you will, but that's okay. We're here. It's lunchtime. Maybe you can have some lunch, re up on your coffee or tea or whatever the hell you drink, or maybe a beer in this environment. Let me turn off this music. You can play music if you want on your own. Anyway, yeah, plenty to talk about. Pretty chaotic all over the place. Selling pretty much everywhere across the board. There are some odd moves, like Nasdaq's holding up, or it was. It's actually looks like it's coming over, rolling over right now. But just some pretty odd action overall. Let's just go ahead and jump into it because I don't have a super long availability time slot today. So we're going to try to do just a quick episode, run down some of this price action, see if we got any new data, which we actually do on Bitcoin specifically. So let's go ahead and get into it. All right, so let's go weekly. Weekly, we still got 4 days into the weekend, so we still got plenty of time on there. Kind of weak so far though. The getting all the way back down to that 24K level. Let me tell y'all something though about this daily yesterday. This daily candle is trash. This sucks. What is this garbage? We couldn't even close above any of this body in price action over here. We literally come all the way back down below these two candles. That is pretty terrible. It looked really good and exciting for a second, but again, one day doesn't make a trend. And now we're already getting some rejections. And let me zoom into this 458 and look what happened here. We get one open and close above the 24K level. We got over 25, but as we discussed on Monday, we need to see the open and close at least on the 458 on one candle above 25K. We couldn't even get that. And we got this little boom and then immediate rejection. And then look at this too. The bodies of the last three 458 candles have been sub all of this action too, just like the daily. This is terrible price action for bulls. Now, is it super bearish or whatever? No, obviously not. We're above 23K. That's kind of about 22, 23 is kind of like the pivot point here, but kind of a weak ass attempt right here. I do not like that at all. Pretty shitty. Can they still make their way up to the upside here? Oh, yeah, absolutely they can. But just kind of, I thought the Bulls had a little bit more here, but they don't. Just getting back below all these bodies and selling off. We are testing 24,000 again. We start getting below 24, we're probably going back down to 23. Then we'll have to reassess from there. Getting comfy back below 23 is pretty ugly. And until we get this 458 or an 8 hour, if you don't have the custom time frames, open and close. I mean, let's even zoom in. Hold on. Hell, look, even a 3 hour, we couldn't even get a 3 hour to open and close. Oh yeah, we do. We do have this one. We have one 3 hour with immediate rejection and no follow through. So even on low time frames, Pretty lackluster performance. Let's go to futures. I mean, it's okay. Hopefully, this is just a liquidation break, but not my favorite setup so far. And yesterday's daily candle, this is, I mean, I really thought bulls had enough to do 25K, but so far it just went back to meh mode, which kind of sucks. But what are you going to do? It is what it is. Also, same for Ethereum, looking real good, and then just selling off, looking pretty crappy. Um, Looking pretty crappy. Same thing. Couldn't even get higher than this. Immediate rejection at this major resistance level. Pretty much. Yeah, I don't know, man. It's not that sexy. Again, 1580 is the support level. So as long as we're above that, it's okay, but pretty nasty rejection so far. Not my favorite setup by the bulls. Pretty weak sauce, if you will. Litecoin, look at this, already given all the pumps up pretty much all the way back down. Needs to really hold $73. I guess the banks are just kind of failing all over the place. It's not really that big of a surprise, I don't think. I mean, some of these banking charts, people are like shocked. Like Credit Suisse today is one, and it's like, oh my God, how could this be happening? And it's like, dude, well, look at this chart. Literally for how far do we have to go back? All the way to 2007, y'all. It's been making lower lows and lower highs. It's been downtrending for literally 16 years. So this isn't like a shock at all. I mean, even Silicon Valley Bank wasn't down that much, but had a very distinct downtrend. Now people are talking about Deutsche Bank, which has also been in a downtrend. Also, since 2007, just making lower lows, lower highs. So, is it shocking? No, not really. It's just finally here. Everybody's been like super euphoric that nothing can ever happen. The Fed will backstop everything and everything will moon and all that crap. But, there was some shady stuff happening on some of the de-risking I've seen in banks doing, even with my own personal accounts, like lowering my credit lines, even though my credit score is really good and all this. We talked about that many videos ago, and we're seeming to just kind of really get the acceptance that this is happening. So, we'll probably just chop a little bit here until the market sees what the Fed is going to do. That would be kind of my guess. Kind of rejections all over the place here. Rallying up to structure, getting rejected so far. XRP never rallied. I mean, everything is kind of just getting rejected from coming up to the consolidations from the beginning of the year. So nothing really new there. Just kind of attempted sexy time, but no follow through. Yeah, you can even see Thursday, big fat doji and getting like no follow through to the upside. Big fat doji under the consolidation area and structure of beginning of the year sell off. So pretty nasty, nasty. Like everything looks pretty much the same. So, yeah, pretty gross all over the place, man. Just dump fest 3,000 across the board. I mean, look at this. We pumped 13. We're down all of it today. Even STX, look at this, pumped real hard. Looked like it was about to try to break out. That's why bodies are so important, guys. You've got to pay attention to the bodies of the candle. The wicks and tails, they're okay. They can give you a little bit of a clue if it has good confluence with the bodies. But if the bodies suck ass, then you really got to question the trend. So we're kind of seeing that play out through most of this. Mega resistance here at 14 cents on True. Hex. Hex is kind of staying up here, but it's got mega resistance at 10 cents. Man, HNT, look at this. Brutal candle yesterday. Wow, 40% almost. It did get caught by this local low here at 150, but pretty nasty, dudes. Man, we're getting engulfings all over the place. I mean, this is pretty gross. So, and that was on the backs of Bitcoin needing to get comfortably above 25K, even on short time frames. It did not, and we're getting follow through on everything else. So, it really is that simple at this point. 25K on Bitcoin. Until then, nothing's going to get enough steam with Mama Bear or not. picking its arse up. All right, let's go to traditionals. Traditionals, just really nasty price action here on ES. We're getting a 21 and 55 cross. We're comfortably below the trend line. But what's interesting about this chart is bulls have been defending this local low so far and haven't been able to take it out yet. There seems to be a real strong battle around that 3,900 area, give or take about 20 points. Let's look at the weekly real quick. Still barely holding on to the higher low structure here. We do have a little bit of a tail threatening the lower band of that, but it's all about the bodies, man. Until we get a body close, probably below like 3,800, like it's okay. I don't know, man. It seems like Chop Fest probably in selling because I mean, obviously Russell's just been dumping because of the bank. They hold lots of bank stocks. I think like 15 or 20% of the index is banks. So they're getting hit pretty hard on that, obviously, because they're more exposed to it. And we're just kind of barely holding around that 3,900 area. If we can let's actually zoom in because we talked about open and closes on a lower time frame below 3,900. We actually did get that this morning from the 8 to 11 a.m. candle on the 3-hour, and it is below these bodies. We do have a little bit of that support right here, though. But, that is the first open and close besides this one. If bulls cannot defend this pretty much by the end of probably into the overnight session by the morning time, I would look for follow through to the downside on this, probably reaching for 3,800 at least. This could accelerate. Let's go to NASDAQ. NASDAQ somehow is still holding 1,200. But it does have that 12-3 handle, which we've been talking about a lot on the show for the last couple of weeks or few weeks or whatever. So it's pretty much been range trading between 12 and 3. There's not really any new data on this one. It is attempting to break out right here from yesterday's candle, so very different than a lot of other stocks right now. I don't know if people were trying to hide their money in tech stocks or something, because if you look at Apple and some other things like that, they're still barely holding on. Although I do want to emphasize the barely part, and Microsoft also kind of in the same boat here. Yes, it is rallying, trying to make a little base. Let's zoom out a little bit on the weekly. It is attempting to make a base and actually looks decent above 250-ish, but you can see about 269 as resistance. So that's just kind of what I'm thinking there. Maybe people are hiding in tech because it's still a little bit elevated. So same thing on this though, as far as opinions don't really matter that much. Its price is king. So 12,000 and 12.3 handle is the same narrative here. Nothing different on NQ. We did get follow through here. This one has looked the weakest along with Russell. With the Dow, we are comfortably below the 200 moving average on the daily. We are on major support right here though at 31.6. So we have made our way back down there. We almost got there on Monday's little wick down, but we are down there now. Next line in the sand is going to be 31.2, so about 500 points from here. If we get below 31.2, this thing will probably get very violent to the downside. That really opens the doors all the way to like 29,000 in this local cluster here. So bulls do not want to see that. And again, I don't think that will happen, but you never know. If we start getting comfy, then it probably will. But we got a week until the Fed comes out, and I think a lot of people are going to be very curious if the Fed's going to rate derp is going to hike rates 25 to 50 points again, or are they going to back off? If they back off and do nothing and say we need to wait for some more data to see what's happening here, I could see that providing a little bit of a relief rally and pause, because a lot of these banks are just getting in really shitty situations because of because I'm not going to go into all of that stuff, but it's because of like rules and regs that they put up. Mainly, if y'all remember, Dodd-Frank really deregulated banks and screwed up a lot of stuff. So that's part of the issue. Let let me show you all a little chart. And the main issue is that because without getting too into it, because it's really deep how they word everything with capital levels, tier one and through, and how they do all their fancy accounting to hide shit. But uh, the reason is they don't have to report unrealized losses on securities, which a lot of these banks hold, lots of bonds, which have been getting decimated. And so they're not having to really report that on their balance sheet. So it looks like everything is fine but they have open losses of, billions and billions of dollars. And this is every bank. This isn't just SVB or Credit Suisse. This is across the board in every bank because they're all regulated the same. So um, I'm going to post a picture later, maybe later tonight, probably tomorrow though, because I'm gonna be hanging out with the kiddo. But there is this picture that shows, illustrates kind of what I'm talking about, and you can go read up on that too a little bit about all those tier one capital rules and deregulations that the Fed did. So, oh no, shut up, phone. But yeah, I mean, so it's not like I don't think it's super surprising. Like I said, when we looked at that Credit Suisse, Credit Suisse, is that you, Rex? Hold on. Oh, sorry about that. Someone was just banging on my door. It was my neighbor's kid. He wanted to play with my son. So sorry about that. I was just very unexpected. I didn't know what to do with that. Anyway, so Credit Suisse. Yeah, I mean all these charts, the banks. There's major issues across the board. It's not like it was unknown. It was just people didn't want to accept the truth. Kind of like with a lot of stuff right now, housing prices, car prices, everybody's trying to get all the money like it was a year and a half ago, but you got to adjust to the market, you know what I'm saying? Anyway, enough of that. Let's just look at price cuz that's what will tell us and give us the best idea of what's going down. And back to pick up off where we left is this 32 or 31.6 area. Next line is saying is about 500 points down from there. And then, which would does that coincide with no, it's actually a lot lower. So maybe a little brief stop there because you kind of get support at the 200. Although that's a tough one, man. Like in looking in history real quick, it either bounces hard off the 200 or just goes through it like butter. So, man, be very diligent out there. Just like we were talking about, when VIX gets back above 22 and VVIX is above 100, you got to watch out for the bears because they can just come out of nowhere, which they have done thus far. Russell is still holding so far this horizontal in the mid 1700s. It hasn't made a lower low yet. What's up, buddy? What's going on, Mr. Buick? Drawing a fib retrace starting from the bottom of the candle, comparing starting from the top will give different values. Is there a method uptrend compared to downtrend? Yes, it does do, and that one is kind of personal preference. It doesn't give too big of a difference in values. Like we can just show that real fast. Let's zoom in to get. Hold on. Yes, I mean it's not going to be like hugely different. So if we just pulled from, let's say, well, since we're bearish, let's pull from bearish structure. So we pull from up here and we go from wick to tail. And if you go here, you can see that's the layout there. And if we go from body to, hold on. If we go from body to body, I mean, look how it's pretty insignificant most of the time. You can see here. I mean, especially when you get deeper, it's only going to really affect the 382 and the 618 a little bit. But it's the deeper you go, the less it matters. I mean, look, like 2 points on the 786 and 886 doesn't really matter at all. I mean, 5 points, and even here is only 10 points. So it's not that big of a deal which one you pick. I kind of just, I usually draw the top to the bottom, like tail to wick, or I'm sorry, wick to tail or tail to wick, depending on which way we're measuring. So if you go over here and measure it on this side, you'd be measuring something like that. And again, if you just use the bodies, it's not going to make a huge difference. If you really wanted to, you could kind of do both and use the range in between the 618 or the 382 as kind of like a little box range or something. But I wouldn't overthink that too much. Because it's very negligible. It's a very tiny difference, and yeah, sometimes it will be big difference. Like if you use crypto is probably a better example. Where was that one HNT? Okay, so it sometimes on crypto it will use big different values. Like look at this wick right here. So if you were to draw this one and you were doing this bullish retracement, you'd be like, oh shit. But if you use this right here, you can see it is significantly different. So in crypto land, that definitely will matter, or something that trades a little bit more volatile. And you just kind of have to pick one and just keep using that same one. Is kind of what I do. And I generally do use the whole price candle just because I want to know, because it did go there. So I wanted to measure that in the fib ratios. But that is actually a really good question because it can give you some different values, especially on real volatile assets. Generally, it won't matter in normie market land, but in penny stocks and crypto and stuff, that definitely could be a case. And also, if they line up with other structures, I would put weight on that too. So you can kind of see. Actually, this one is like a 618, and it does coincide over here nicely. Nicely. Is that a word? I don't know. But yeah, I would just kind of pick one and stick with it so you don't confuse yourself. And the way I do it is I take all of the price action and look at it because price did actually go there and business was done there. So I take the whole thing. But if you want to just do bodies, that works too. So I would just say pick one and stick with it so you don't confuse yourself in the future. All right, let's see. Back to Russell in the middle 1700s. It's okay here. There's a little bit of support, but it ain't great. I do think if no other like major huge bank goes under, especially in the U.S., that it probably will just kind of chop in this range here. We do have some bullish divergence building in the last 5 days now. On from starting back here, we got 1, 2, 3. 4 stabs now of bullish divergence. So that would only get negated if we get open and close below like 1730 on Russell. So it's camping. It does look bad. It's nasty. Everyone's like, what the hell is happening? And to be fair, when Lehman Brothers crashed in 2008, it was like just the start of the carnage. So if you don't know what I'm talking about, let's go look at it real quick. Yeah, this works now. When I tried to do Alt G the other day, it didn't work. So you can see here, I think it was like September, I believe, October. It was somewhere around here in the early fall that happened. And so you can see it was already shitty. Like it was already down, 20 something percent. But then that just gave the catalyst for it to get real shitty, and then it dropped another 40%. And that was, let's see how much time that was, if I can freaking, come on, TradingView. Another about half a year, roughly. So about 5-6 months, and then it put the ultimate bottom in after that. So, is this just starting? Is this the first week of many weeks of just continuous selling? It very well could be. That is not out of the cards, that's for sure. But I think just keeping an eye on the price action and making sure it's kind of holding critical areas is the best way to watch this. We start losing. Let me look at the weekly again. We did cut all the EMAs last week, so that's never good. We were mentioning whenever you slice through all those, it's never a good thing for bulls or bears, depending on which side you're on. But we do have really good support around this 3,900 ish area, so we'll see what kind of happens. We start getting comfy below there, man. Though, oof, and definitely sub the 200, which will be ratcheting up slowly over the next few weeks. Being between 37 and like 38 and a half over the next like 5-6 weeks. But oh. Excuse me, I wouldn't be surprised if we just do chop fest until the Fed says something. Oh, let's see. I mean, start the fib from the top of the chart or the bottom of the chart. Oh, oh yeah. Okay, sorry, I misunderstood your question. Then, yeah. So if you're measuring bullish retracements, like let's say before this price action happened and dipped really far. So if you want to measure bullish retracements, you come from the bottom to the top, right? Because then you want the 382 retrace. Above that's the momentum is fully on the side of the bulls when you're measuring this way. And then you get the 618 retrace from this structure that you measured. And then now you're kind of sitting around the 786 and 886, which is deep retraces. But just without getting too many details, try to keep it simple. Yeah, you measure from the bottom to the top of a range for the bull retraces, and then you flip it around. So like right now, this I would be doing. I would be doing this. I'd measure it like this. Boom, because we're in a bear trend now. We're making lower highs, lower lows on the daily. On the intermediate structure, of course, on the longer structure, it's still okay. But on the intermediate structure, I'd be watching it like this, and I'd measure from the top of here to the bottom of this. And you can see now we're struggling to get above the 382. So just as I mentioned, 382 for the bullish side, or the momentum stays. If you're above the 382, it's reverse in the downtrend when you measure from here to here, because it's trying to regain that percent move. And 382 right now below this, pretty much about 4,000. Below that, the bears have all the momentum until it gets back above there and tries to test 618. You can say maybe it'll flip back around, but right now, drawing it like this, you can see the 382 for the bear market right here. It needs to break that, and until it's above that, momentum is very strong for the bears for sure. So yeah, you just flip it. You start. When you draw it, you just start then you're starting from the bottom to the top because it's a bullish. Just think up price. And if you're measuring bear retracements, you start from the top down to the bottom of whatever you're measuring. And you can take this on any time frames or whatever, any structure and all that. It's the same principle. So I hope that helps. All right, let's see here. Dow Jones, trannies. Ooh, trannies all the way below the 200. Still higher low so far, but really testing the bulls' power right now for sure. We got follow through on NASDAQ, on FDAX, DAX futures. This is a German market with Credit Suisse and some of the contagion over there happening. This is starting to look pretty nasty. A little bit of major support around mid 1400s. Below probably about 14.2. It starts to just go into all this business. This is going to be kind of a tough one. It's going to probably take a little bit to resolve. The weekly does look kind of decent right here at about mid 1400s as well. So a lot of confluence, excuse me, in the mid 14s for DAX. You start losing that, oof, man, Deutsche Bank's probably going under, and some other European banks as well. Wow. So I guess Chinese market's just going sideways as F, just chilling. Doesn't really care about the contagion right now. That's interesting. VIX above 22, popping real hard today, up almost 20%. As long as it's above, we can ratchet that up now because we're getting some consolidation above that, like very strong consolidation. And so I'd say above about 25. The Bears are very much in control until we lose 25 bucks on the VIX. I would be very concerned. VVIX also giving us that too. We had mentioned last week getting over 100 on VVIX. You got to watch out for Bears, man. That's their pivot point, and this goes back into VVIX's inception all the way back to '08, I believe, 06 ish. So you can see most of the time it's sub 100. Only a little bit is it above 100. So you do have to be cautious when it's above that bill level. Fixed futures are going to be the same. Oil just getting nasty follow through right here. We had rejection on this, what looked to be a great candle, immediate rejection that took out the previous 3 days and all the EMAs at the same time. That is very bearish. And then we get follow through the next 3 days and continuation. We are below the 72 handle. We're actually below 70 now. So this is pretty freaking nasty. There is some support right here on this trend line. Let's zoom out a little bit. Oh my gosh. Stupid negative 40. Back to 2008. Is there really good support here? There definitely is super good support in the mid 60s. We start losing 63 bucks though. Oh man. Oil could literally go down to like 40, 50 bucks pretty easily. That would be a brutal move. So getting a little bit nasty here after losing major support early this morning around $72. There is a decent support here in the mid 60s, but man, starting to get comfy in the low 60s, below 63. I would be looking out for this. NG rolling over. Looking a little heavy now. It looked good for a little bit. Then we got a warning candle right here, rejection from the Bears, saying, no, you ain't got shit, bulls. Let's get you back down. And now we're barely holding on to this consolidation area at about 245-ish. Really below sub 250. This actually does look pretty bad, to be fair. So pretty nasty price action on nat gas. Bonds are just rallying hard. I guess they're thinking they're going to be backing off on rate hikes and stuff, is kind of what that's implying. We won't know until next week. They are also at major resistance levels, though. So everything is kind of like pushed to its next support or resistance level. And so now they just got to break them, whether it's bullish or bearish setups. And I don't think that will happen. While they're doing bouncing right off of that, the green box of prosperity, man, it actually looks kind of good. That's, man, this market is just all over the place, man. This is all over the place. It's just a little bit confused and probably a little bit surprised. Euro, obviously, going to be opposite. All right, gold is actually doing something cool. It's looking better than most of the precious. Actually, it is looking better than all the precious metals. This weekly is looking pretty damn nice. The daily, we're getting follow through today. That looks pretty damn nice. I do like the bounce. Bulls rejected the Bears selling pressure right here today when it got right to the horizontal. This actually looks pretty good, man. I do like this chart as long as we're holding above about $1,900. Not too shabby. I really want to see the weekly open and close above here. Harvey Walker 500. What's going on, man? You're feeling very bullish on natural gas. Well, I'll tell you what, I hope that it does go up. That would be cool for a position that I have on, but you know, the chart doesn't look really good. I'm not sure what your reasoning is for your bullish action on nat gas, but it doesn't look great, but it doesn't look terrible until it loses like 240 again. Then you probably fill this gap at least, but you know, everybody's got a little bit of a different opinion. I hope you're correct. Silver rallying up to the 2250, like the Jesus man, stops and rejection so far. Let's go to the daily. Man, the daily, see, it doesn't look near as good as gold. Already getting rejected all the way back down below yesterday's body. That's kind of surprising for silver. Really needs to get over 2250 to get going. Platinum getting rejected too. Is this just a retest and maybe a higher low? Possibly. Still looks okay above 940. Not too shabby. Palladium, this is looking like a rejection setup right here. But to be fair, until it's below 1350, you can't really hate it too much. It has been selling off pretty much every single day for months and months and months. All right, I wanted to show something for you can use a 2 week for this too for Bitcoin. Um, God, I got too much shit drawn on my charts. It's already losing it. So wait, hold on. There we go. Let's go to log. I do not like linear charts. I only go to linear on the net or on the oil chart when I have to look with that stupid -40 wick. It's funny, the price is so big that it helps being in linear. Usually you can always see price better in logarithmic, but when you get mega extreme special price action like that, yeah. Anyway, the point I wanted to make about this, if this closes above the previous wick here on the last couple weeks candle, this actually would set up pretty bullish. And you can see with my color candle code, which is kind of what that's referencing, if it did close above in the next day and a half, if it closes above like 25, 5-ish, it will actually trigger a green candle. And those are usually pretty badass for longs. You can kind of just see back in history that they mostly get lots of follow through. And so I'm watching that like a hawk, even though Bitcoin's kind of being a bitch right now, to be fair. All right, let's see. I think that's probably it. Let's look at sectors. Oh, look, they're all down. Except XLU is flat. Let's go look at banks real quick. Oh my gatos. How could this ever happen? Dang, brutal. 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 Just selling, selling, selling. Looks pretty gnarly. I hope my SYF short comes into play here soon. And then I don't know if I mentioned that on here, but I was smelling something weird in banks pretty much the last few months. I wish I would have looked into that a little bit more. I just was kind of focused on this one bank and shorted it and was like, oh, okay. But yeah, now it's kind of just this contagion thing. When I mentioned earlier in the stream about them adjusting my credit limits and not having any reason for it and all this stuff, it was just kind of odd. It's like, they're de-risking. What do they see? You know, what do they have on their books that's showing them that they need to de-risk like by a lot? I mean, you're talking 50 to 75% cuts on some of the stuff they did. So pretty interesting. Yeah, I don't really see anything there. Let's see. AMD, Amazon, Apple. Damn, Amazon is like really in the shitter over here. Jesus Christ. I don't look at Amazon that much, but damn. Damn. It is kind of consolidating down here though. It looks okay above like $88. Disney trash. Facebook is saying F it. We are the new bank. It's literally attempting to break out and go test next resistance at 230. How funny is that? Well, all right. Gap and go on Facebook. It gets above like 196, dude. This gap fill comes into play. That's kind of wild, huh? Who would have thunk? Alrighty then. Obviously, that's all going to be down. Let's look at blockchain stuff real quick. It's called Meta now. Oh, I'm so sorry. God, I don't want to piss off Robot Zuckbot. It's funny that you can still put FB in there for the ticker, and it will still pull up Meta. That I don't know if I've ever seen that in different stocks. Usually, it'll just blank out. Yeah, sorry. Let's see. Silvergate. Oh, look, it's going down. Interesting. What is Square doing? I want to get my Zuckerberg. Oh no, man. That does not sound fun. That does not sound good, Harvey. I do not want any of that Berg of the Zuck. Please, no. I don't wish that upon anyone. He might be knocking on my door here in a second with his little robot face. Block. Yeah, SQ is the same. It's like square, but now it's block. So cool. PayPal, yeah, not looking great. Let's look at our index here real quick. Our little minor index. Yep, major resistance at about 260s. Not very good. Not very good. Just kind of nothing. I guess it's not bad, but it's not good. It's just very neutral and lame and boring and sideways. I mean, look at this Chop Fest 3000 for pretty much almost a year. So the better half of a year. I mean, we're kind of just chilling here. Nothing really to say about the no edge or help on that at all. Damn. Cores is actually still holding up. This is an interesting sideways pattern. Kind of want to. I got a little FOMO the other day. I was like, man, I saw this dip and wanted to buy. I didn't buy any, but on the stream on Monday, I mentioned, it's like, dang it. I had a feeling, but that's okay. Opportunity is infinite. You can always buy something or sell something and make money later. This one actually still looks okay above 25 cents. How about Coinbase? What are they looking like? Yeah, it's okay. Look at all the EMAs literally within $5 of each other. Long, short term, every term, all the terms. So this actually technically looks pretty decent above $58 on Coinbase. Really would like to see the bulls get at least an attempt above like 666. Okay. About 66.6. Of course, that's the number. GBDC. Any clues? I need a raging clue right now. No, we are getting the volatility to pick up a lot. So, I mean, that's not terrible. That does happen sometimes before some big moves. But, I can't put all our weight on just one indicator. I do like the structure here, though. Lots of support at around $12 on Grayscale. So that is interesting. How about MicroStrategy? Yeah, it looks like our minor index pretty much just sideways as F. Sideways AF, or we can just call that SAF. Yeah, I think that's it, man. Everything is just dump fest 3000. I guess Credit Suisse apparently scared everybody. It's because it's been like an old bank for a long time. It's a Swiss bank, so maybe people are like, "Oh my God, Swiss banks aren't safe." But again, just pull the chart up. Okay, it's been terrible literally since 2008. Okay, 2007 actually. It's been terrible. Lower highs, lower lows. I mean, even on the monthly. Look at the monthly. Bloop, 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 bloop. Just water falling down. Or I guess stair stepping down to its ultimate waterfall pattern here. So my buddy is really into finance fundamentals and stuff, and he's like, "Oh yeah," he's like, "Credit Suisse is a run like garbage." So apparently, it absolutely is. The price has been telling us that for a long time. And just to reiterate how important TA is in price action, look at this rejection. Consolidation on the lows. You break down below the previous consolidation. It's bearish as hell. It's uber bearish on this day right here, last Friday. And then it dumps, what is that? 50% or whatever, 30 something, 37%. And I mean, this, like I said, this has been so bearish for so long. It's like, but no one really looks at that. Everyone is in bull goggle mode. It's just like, just even talking about shorting triggers people, All right, I think I'm done for the day. Wrap up. Bitcoin weak ass sauce here. Needs to really get preferably the 458 open and close above 25K, which we apparently can't do. We're actually already back below this consolidation, which we were concerned for during these streams in mid-February. And now we're struggling again with that same freaking level. So bulls looking like little bitches right now. Maybe it's just a quick liquidation break because this was a really fast move up. So I think that's the best case scenario for the bulls at this moment. But we lose 1580 again, or we lose like 23,000 again. Uh-oh, watch out. Watch out. ES floating around 39. Still making a higher low so far, so it's not uber bearish. Doesn't look great, but it's not uber bearish yet. The only one that's in pretty bearish mode is the Russell, in the Dow. So, but Nasdaq 12,000, 12,3 ish, still the same shit as the last few handful of videos, whatever. Let's turn back on our horizontals here. Yeah, we are at major support right here at 31.6. So I wouldn't be surprised to see some kind of little bounce. We are getting whipsaw moves like crazy right now. Up, down 2-3% in like an hour. Every other hour, it's just ping ponging. So I could see a little bit of rally popping off of this. But this week is going to be pretty important, y'all, to see how some of this stuff closes out. And then obviously next week will be uber important with Daddy Fed letting us know what they're going to do with the rates. Yay. Anyway, much love, guys. Stay diligent out there. And if you're getting too emotional, man, and you're getting too a little freaked out or whatever, sitting on your hands and in cash is a position. A lot of people don't think that. Like, well, cash doesn't pay me or whatever, blah, blah, blah. But it is a position. You can use that for firepower later. So if you're just feeling a little giddy, just turn the charts off, go do something, go take a walk, go have some fun with some friends, go to the bar, go whatever the hell you like to do to get your mind off stuff. The markets aren't going anywhere. They're going to be here forever until you die. So, don't try to force trades and then start making emotional based trades where you'll really start to lose money and really get kicked in the balls. There's nothing wrong with sitting on your hands. And in fact, in this kind of environment, cash is king, because if shit keeps selling off and you've got cash, you might be able to buy things cheap and make good trades off of that. But that's just one thing I've noticed when I start getting certain emotional triggers about how price action is. I just turn it off, man. Can just come back the next day. Sometimes you just need a little sleep or whatever and wake up with a fresh new day. Sometimes that can make a huge difference. Don't feel obligated that you have to always have your money in positions. I think one of the most important and overlooked things in trading is to not trade. Sometimes you don't trade. You don't always have to be in something. And that's one of the hardest things to actually do, because you want to be engaged. You want to try to catch the opportunity and all that. But sometimes the best idea is to just sit on your ass and on your hands in the nicer way and be patient. Some people do say that success in markets take money from the impatient and hand it to the patient. So I can't remember who said that, one of the big investor dudes, but again, I just wanted to make that point, especially in this type of environment. Don't feel obligated to chase stuff and get reverse FOMO or whatever. If you're feeling a little giddy, a little emotional, just take a break, man. Go get a margarita at your favorite Mexican place, or a beer at your local shithole bar. Play with the kiddos, something. Markets will always be there. And it's always better to have a lot of cash, too, when a lot of people